right, it is time for Property Explained, and joining us this morning is Tim Akinusi, who joins us every week to explain a whole bunch of stuff around property. And one of the key things today is how to pay off your loan in 7 years, and the pros and cons of having an open account with your bank. Good morning, Tim. Are you well?
Good morning. Very well, Mo. Good
Yeah.
to see you.
You should see the tweets. Okay, so can you guys get to that part about the 7-year bond thing? All right, we here.
Yeah, we here.
So, is it possible to pay off your home loan in 7 years on your property?
The reality is it's absolutely possible, right? Same way you can pay off a car in 7 years. So you can do it with a home loan. And the key thing is about understanding the power of compound interest, right? So what is compound interest? It is interest upon interest, right? It is that amount that continues to compound over a period of time, and that's what gives it its tremendous value. So the way to explain this is this, right? If you're paying off your home loan, the first 15 years of the life of your home loan, 85% of your monthly repayment is going back towards paying interest, right? Only 15% of that goes back towards paying down the debt itself. So the trick is to shorten that interest rate cycle, right? By paying an amount of 15% over and above your contractual monthly bond repayment. So if you're paying a bond of 10,000 a month, by simply paying 11,500 a month consistently over 7 years, you will then reverse the compound interest effect, and you would pay it off in 7 years. So before, when we didn't have apps, banking apps, etc., you couldn't really see how much is your monthly installment, how much is that going towards paying off the bond itself, and how much is that going towards paying off the interest. Now with apps, you can actually see that.
Sure.
And you can see your bond amount go off, and it will show you what the interest charge is.
Yeah. Is there something I can do midway through? I mean, I'm assuming your example now is referring to doing this off
From
the
the
jump.
start.
Yeah.
Absolutely.
Can you do it midway through your term?
You can,
Yeah.
you can, but it will take you a 7-year period for you to then see that amount get down. Yeah. So even if you're in year 5 and you say, I want to pay this off in the next 7 years, just add 15% more. Right. And so why 15% more?
Yeah.
Because that is that amount that you can actually sustain. So we're not asking you to say, change your lifestyle, stop paying your car, or, stop going out. But we're saying dedicate another 15% more on your monthly installment, right? And be consistent about that for 7 years. And you will watch as the interest that they charge every month reduces and reduces. And very soon, from year 5.5, you'll start to see that 85% of your repayment actually goes towards paying off the debt rather than paying the interest.
My gosh, dedication to the T.
Yeah.
Now, is it a good practice to pay off your home loan earlier than the 20 to 30 years bond term? And who benefits the most from this?
From that, right. So it is a very good idea to do so,
Sure.
right? Because your home loan is the cheapest form of debt that you will ever, find. So the moment you pay it off, right, you can then use those funds to pay off anything that is of a consumption nature or an investment nature. Because the debt that you are paying on the home loan is at about prime. Say prime minus maybe 50 basis points or less.
Sure.
Right? Versus your credit card that's at 15 to 17%, or your overdraft that's at 21%. Right? And so you are the one who absolutely benefits from being able to pay off your home a lot earlier and to use those funds.
Sure.
Because the banks can only make money off of the interest that is charged over a period of time. So what you want to do is to deny the bank the opportunity to make any money on that interest.
Because they don't deserve it.
Damn the banks.
So what people always ask is like, but if this is the case, then aren't the banks going to lose money?
Yeah.
The banks are counting on the fact that not everybody can do that. That is exactly.
See what I mean?
Tim, if I pay my bond off, say in the 7-year period,
Yes.
wow, wouldn't that be fantastic?
Oh.
Firstly,
Yeah.
but what happens to the bond after that 7-year period? Does it remain open? Is it dormant, or does the bank say, "Congratulations, it's all yours, bye"?
Right. So you can actually just keep your bond account open. Of course, there's a small charge to doing that. It's about 6 to 9 rand a month, and the bank will hang on to your title deeds. You can request that as soon as it's all paid up. But the trick is to keep it open, because you can always take out a re-advance against all the money that you've paid out, right? And it's always important for you to do that rather than go and apply for a new bond where you could face initiation fees, a cost of registration, and of course on your property you would have also appreciated in value over that time, right? So it would actually be worth a lot more, right? So me personally, I needed some more money for my business. All I simply did was a straightforward application to the bank that held my bond, and they released more funds into my transfer scope on my bond account.
Because you've been putting that money in there anyway.
100%.
Yeah. So
100%.
essentially, if it's £1 million house, what would you have in your bond account today? £1 million.
R1 million if
Yeah.
it's paid off, right?
If it's paid off, exactly.
Yeah. So which
Yeah.
means like let's use the number of a R2 million bond.
Yeah.
Once it's paid off, right? And you see an investment property for R1 million, you can actually go and ask for re-advance
Yeah.
on your existing bond, take that 1 million and pay that second property cash without a registration.
Yeah.
And then you just be paying back the $1 million on your existing bond.
So it's safe to say, Tim, that for those who are buying property for the first time, with that first property, it is key to get it done as quick as possible,
Absolutely.
as best you can, right?
Absolutely.
Because then it really sets you up beautifully for so much going on into the future.
100%.
Yeah.
And that 15% that you pay, by the way, it sits in your bond account as a surplus. So you have access to it at any point in time. But the banks cannot charge you interest on that. They can only charge you interest on the amount owing. So the more you deplete the amount owing, the less interest they can charge you.
Absolutely.
Yeah. So
Well, this is why the gentleman earlier was tweeting us, because he knew that he was going to walk away with something valuable this morning.
gosh.
Tim, if anybody wants to pick your brain some more, where do we find you?
Please reach out to us on mortgagemarket.co.za and see us on Instagram at mortgage.market. We will give you access to the top 7 banks in the country and pay you 5,000 in cash back on your home loan.
Brilliant. Tim Akinusi, fine gentleman, talking about the fine matters around property. Thank you so much for your time.
Pleasure.
Brilliant stuff.